So Owen's here. We've had the worst 24 hours of 2012 on the markets, haven't we? But Europe's trying to kind of pick things up a little bit at the moment.
Yeah, it's all been so good in the first 3 months, Stuart. It was bound to happen at some point. But it's really that sort of convergence, really, the Eurozone crisis coming back to haunt many investors. It's Spain right back in the frame. Their borrowing costs up to their highest level on Tuesday since December, at the height of the last Eurozone crisis, if we can put it that way. But at least, as Stuart says, the markets are trying to stage something of a fight back this morning, all up around 0.5% at the opening bell. Watch out for stocks in Spain today. The Spanish Prime Minister Rajoy is due to address the Spanish Parliament around lunchtime to talk about how this country can combat its mounting debt problems. He said yesterday Spain's future is at stake. The Asian markets, a sixth straight day of losses across Asia. The Nikkei did manage to pull back some of those losses, but still ended the day around 0.8% down. You can see just the Shanghai Composite managed to find a little bit of green, but the Nikkei, not a day to remember there for traders.
Now, Sony's shares have ended the day in its native Japan 4.5% down. The sell-off triggered by a big shock for investors. Sony announced its losses this year will be twice as bad as the company thought only a couple of months ago. And a company that dominated the 1980s, of course, with the Walkman, I remember that, is prompting the question, why can't it take on Apple?
The sun hasn't set on Sony yet, but the Japanese Electronics Corporation announced on Tuesday its worst red ink ever, a loss of 520 billion yen, nearly double what was projected. Sony attributes its fourth year of losses to multiple factors.
We were faced with the earthquake and the tsunami disaster, stronger yen affecting the market, and we've also had floods in Thailand. The difficult economic landscape and matured markets in the US and Europe were factors that resulted in such a loss. But going forward, we will make efforts to raise revenues.
Between natural disasters, lost market shares in the TV and tablet sectors, thanks to the success of competitors Apple and Samsung, and not being able to use U.S. tax credits because revenue was smaller than expected, Sony has had a bad year. They announced on Monday plans to cut 10,000 jobs, or 6% of their workforce. After taking over as CEO this month, Kazuo Hirai will outline Sony's plans to become profitable again on Thursday.
So, Owen, Sony's problems seem to be a combination rather than one weakness in isolation.
Yeah, the company itself says it's been a number of factors, and I think that's probably right. You cannot underestimate the impact of the tsunami and the Fukushima disaster in Japan. Sony went from a company thinking that they would earn around $2 billion in profit in 2011 to actually losing more than $3 billion, so a loss there. Money as well, we're talking foreign exchanges, that overheating yen that we've talked about so much over the last 12 months, really eats into the profits of a company like Sony, which does so much business overseas and then runs into trouble when it brings those profits back home. Gaming as well, the PlayStation, that was the big games console of 10 years ago where huge excitement. Yes, it still continues to sell well, but it's fallen behind now, behind the likes of Xbox and the Nintendo Wii. It's actually the third biggest selling games console in the world. And music, Sony was way too low to embrace the MP3 revolution. I certainly don't know anybody I don't know if Sony is still making MP3 players, and the reason I don't know that is that I don't know anybody that actually has one. This is the company that was really caught napping, if you like, with digital music, and of course Apple came along and pretty much stole its thunder when it comes to things like the iPod and so on.
You got the answer for them?
Well, the answer, they perhaps are already trying to address this. Just recently, in the last couple of weeks, they bought themselves out of their partnership with Ericsson. You might remember 10 years ago, Sony Ericsson phones were among the most sought-after phones. They were the sort of smartphones of their day. But of course, they lost out in the whole smartphone revolution. They spent $1.5 billion buying themselves out of that partnership with Ericsson, and they're going to relaunch their own brand of smartphones. And that's really the only way they can go right now, to try and maybe combine games consoles with smartphones to give people basically games on their phones.
Okay, we're going to pick up on a few more of the day's company headlines. Alcoa has confounded expectations by reporting a surprise profit for the first quarter. The world's biggest aluminium producer turned a $94 million profit compared to a $191 million loss for the fourth quarter of 2011. But profits remain sharply down compared to the $308 million it made in the first quarter of 2011.
And a second leak has been discovered at the site of a spill off Brazil's coast last year. The country's oil regulator says small drops of crude were spotted on the seabed near a well run by Brazilian firm Petrobras. It's the same region where US competitor Chevron lost 3,000 barrels of oil in November. Oil regulators ANP are testing samples to establish who's responsible for the latest leak.
Now next, taxing times for US presidential contenders. Barack Obama, of course, on the campaign stump. He's trying to convince Americans wealthiest shouldn't pay less than 30% tax. But does that play well with Democratic heartland, who've made hay over Mitt Romney's admission that he pays less tax than most on his fortune? Getting legislation onto the statute books might be a step too far.
A 30% tax on Americans earning more than $1 million a year. That's the Obama administration's proposal to alleviate income inequality and raise an estimated $47 billion over 10 years. The so-called Buffett rule was inspired by the billionaire investor himself.
Warren Buffett is paying a lower tax rate than his secretary.
Investment capital is taxed at a lower rate than salaries, meaning many of the richest Americans pay less tax than middle-class earners. But President Obama says his proposed tax plan would narrow the income gap and, along with tax breaks for the middle class, help boost the broader economy.
The share of our national income going to the top 1% has climbed to levels we haven't seen since the 1920s. The folks who are benefiting from this are paying taxes at one of the lowest rates in 50 years.
Republicans have accused the White House of engaging in class warfare by targeting the rich. And presidential hopeful Mitt Romney, a multimillionaire himself who paid just 15% on his income last year, says it would negatively impact job creation and investment.
You know, out-of-touch liberals like Barack Obama say they want a strong economy, but in everything they do, they show they don't like business very much.
Polls show a majority of Americans support Obama's proposal, though it's expected to fail when it comes to a vote in the Senate next week.
So as Owen said, Spain's debt's causing havoc on the markets. Bit of a shame, though, that one village's, should we say, far-out plan to help pay them off hasn't quite worked out, has it?
This is the village of Rasquera in Catalonia, Stuart. It held a referendum on whether to allow a piece of land to be sold for growing marijuana to help pay off that village's mounting debts. The majority of the village voted yes. They were in favour of this plan. Unfortunately, they didn't quite get the 75% majority they needed to
What a
pass
shame.
that.
Oh, well, we were thinking of doing it on the roof here. Owen, thanks a lot. Owen there with the business. More, of course, coming up after the break. Stay with us.